So we lots to unpack this morning. Nvidia came in with another solid quarter, but the growth inevitably is slowing. In Canada, CIBC delivered an earnings beat. TD also beat on earnings, but it still has that spectre of the US money laundering charges in the background, even though it did reach the settlement. Let's go to Christine Tan. She joins us now, portfolio manager at SLGI Asset Management. Thanks very much for coming on the show.
Good morning, Andy. Good to be here.
Give us your take on Nvidia this morning. What jumped out for you, Christine?
Well, first of all, another solid quarter. Maybe it's fair to say that the type of spectacular beats that we've gotten used to is you're starting to see a moderation, but that's to be fully expected. And I think what's important is Jensen is pretty good at sort of communicating that.
Right.
And you're seeing that in the stock price overnight, so it's a little bit weaker, but given how far it's come of just year to date, it's really, we'll call it sort of a bit of a wash. Some of the key takeaways, though, it's interesting to note that, China's been an overhang. So if you had sort of to highlight one company that's really caught up in this whole U.S. new approach to linking economics with geopolitics, Nvidia is definitely one of those. So they provided forecasts for Q3, and they didn't include China. And yet it's still a quarter that's going to be growing sequentially. So it's a bit of a new approach. Now, Jensen did talk a lot. I think I heard this reference earlier on this channel. It's just demand's still strong from the hyperscalers. There's a bit of concern at the start of the year with DeepSeek, but demand's still strong.
They have enormous customer concentration with the internet giants.
Absolutely.
But apparently there's a long line of people who want to buy the devices, so that's not seen as such a threat in the short term.
That's right. And to your point, these big customers, they know they're going to be spending a lot, so they're trying to figure out if they can find their own solution in a way, right, to kind of vertically integrate. But it's going to be difficult. So if you look at how quickly Nvidia has been innovating its chips almost on an annual basis, they're upping the level of their technology. That's hard to do unless you have the money to really invest in that kind of R&D.
It's amazing how in tech you get these frenemies situations.
Yes, exactly. I mean, you're competing on one hand, but you're...
I'm thinking about Google and Apple. All the money Google paid to Apple, so it would be the default search engine on
That's
iPhones.
A great call-out. Yep, exactly.
Even though they compete, broadly, maybe we could have a look at the Nasdaq 100 as a benchmark for tech. Are you market weight in the Mag 7 stocks, generally speaking, or are you slightly less?
I think when we look at our underlying managers, so our team specifically focuses on asset allocation, but our underlying managers, they do have slight underweights in some of the Mag 7. We'd even say that, perhaps it's more of a Fab 5, Fab 4 situation this year instead of a Mag 7. But their focus is more on valuations versus expectations. So not calling for a loss of leadership, because again, these are tech companies that are spectacular at what they do and they have a really long lead. It's really more around how quickly they can continue to grow earnings and where the valuations sit. So great companies, just bits and pieces where valuation becomes a bit of a stretch.
I think you can't get into individual bank stocks, but tell us about any themes you saw emerging today.
Absolutely. So far, it's been a good quarter. The banks have generally been sort of slightly beating expectations. In some cases, CIBC's, to your point, has had a really strong sort of track of several quarters now of beating expectations. Some of the themes that you're hearing, provisions have been creeping up for non-performing loans. But again, it seems to have turned the corner from the worst levels. The CEOs are all talking about how strong their balance sheets are, their capital ratios, which just translates into the fact that they're not going to need to issue equity to bolster their balance sheet. So as an investor, that fear of dilution isn't quite there. Then there are pockets of strength, wealth management. We just talked about the record high markets. So wealth management is still a strong business, and it's high margins. And again, wealth is the type of business where you don't need to put a lot of capital behind it. So you can see where the focus is. So by and large, credit doesn't seem to be as bad yet.
Okay.
You are seeing some noise, softness around the economic data in the Canadian economy. You've heard sort of the Bank of Canada talk about how they're trying to figure out what the impact of tariffs will be on economic activity and all of that. So those are the things we're watching for. But so far, domestic banking has been resilient, if I had to pick a single word to summarize the Canadian banking sector.
And TD certainly delivering in the latest quarter. Yeah.
That's right. TD's been sort of, as I like your word, your term of sort of the overhang of what's been happening in the U.S., but domestic banking came through for them.
Yeah, like a spectre in the background.
Yes,
it hasn't
exactly.
fully gone away. Thanks very much, Christine.
You're welcome.
Christine Tan of SLGI Asset Management.